Hello everyone, this is DayTraderRockStar, and I'm just going to do a little S&P video here talking about the overall market conditions right now and a basic concept of uptrending and downtrending markets and the use of stochastics and momentum and the major moving averages here. So basically this is going out a year now. I just want to go back a year, that considering this is the beginning of July. We go back to July here and we can see a nice uptrend starting. And when a trend starts in a market, you basically want to look for a continued trend. Trends are defined by higher highs and higher lows, moving up trend. Moving averages that are just moving in an upward direction, and trend lines that are moving up in an upward direction. You could follow it with momentum on the stochastics by following the oversold and overbought areas of the stochastics. When you get overbought on the stochastics, it usually gives you an indication of a higher high. When you get an oversold indication on the stochastic, it usually gives you a higher low, and that's an uptrending market. Now recently, you could follow that, and it's very good. I have it marked out here. Each time you see these positive crossovers on the stochastics, and these are full stochastics, 1433 are the parameters. When you get a positive or a bullish crossover that I call, you could see the nice bounce. Usually these are bouncing off of multiple indicator setups, usually a trend line or a moving average or underneath this, and a very bullish market would show that. Now recently we starting in May, we had that pullback, we had the flash crash, and all of a sudden we're trading underneath these major moving averages. We broke down under the 20-50 period moving average, came down to the 200, we bounced, we pushed up, stochastic, everything got real shaky at this point, and now we confirmed ourselves in a kind of a downtrend, because we got a bounce and you could actually start to put a trend line in. Remember, uptrending lines connecting higher highs and higher lows, downtrending lines connecting lower highs and lower lows. So we're in a downtrending confirmation, and we're in the lower part of that. And the stochastics here are in the lower part of the range here, an oversold indication. So we're going to look for this bullish crossover. It doesn't mean the whole trend is going to change. It means at this point that we're trading in the markets is a higher probability of a bounce area. And that's what I want to point out to us. That this was the recent sell area, because now the confirmed trend line. We pushed up to the 50 period moving average. We sold back down. There's a confirmed trend line down here that we're on. We made a bullish candlestick recently last week, and the stochastics have pulled back. Now there's a couple situations here. This is a couple of scenarios that could work out here, and basically the scenarios are: this could be a large wedge pattern. We're in the lower part of the wedge pattern, and we could get a break up here. We get a positive crossover on the stochastics, and we start to get an uptrend pushing back up towards the downtrend line here. Or the other scenario is we break down here, we confirm the downtrend, we really break down, and not to say all hell breaks loose, but this is then we really pretty much confirm a down, or what we call a bear market, a 20% pullback or 20% pullback from the highs, and that would confirm a bear market, and that would show up as psychologically in the markets. You would hear that coming across as analysts would bring that to the forefront, saying, all right, we have a 20% pullback from the markets to the highs, recent highs, and the group thinking in the markets would pull a lot of money out of the markets until things really straighten out. So it's very important that we see a bounce here. I think it's very important. The markets are kind of kind of like sheep here. People follow what analysts say, and what happens in the recent history now is there's so much media coverage of the markets that there's so much media coverage of the unemployment rates and the financial crisis in Europe and the financial crisis here in the U.S. and all these situations that are happening, and all this is it scares people out of the market. Now this can end up being a good opportunity or a bad opportunity. I'm taking a shot that I'm going to go on a limb and say I think we're going to hold this level and we're going to get a little retracement. I don't know if this is going to end up being a wedge pattern. I definitely think we have a bounce opportunity here, but I'm not going so far to say this is going to be a major reversal yet. But this is the best opportunity I see right now for a bounce opportunity. If we break down through here, things are going to get real shaky. I think at this point, in the markets, you have to be very cautious. If you are going to go long, you have to be, scaling very small until you get a confirmation break, crossover in the stochastics. If you get that confirmation crossover, I think you have a multiple day rally, and I think you could get some decent money out of this market. So I'd wait for that. We haven't really confirmed that yet. We need to get some breaks. We need to get an uptrend here. We need to break above this recent two-day period here. And if we get through that, then things are going to change. We could actually move out of this pattern to the upside. I think this could be a possible wedge pattern to the downside. I actually think there could be a possible break up out of this pattern. We could move back up, but it has to be seen. It has to be proven, and a lot of things. I think the market's really pricing in all this negative news. There's a lot of negative news out there, unemployment rate and stuff, and the market is in a double dip recession, a double dip. Everyone's talking about. I think the market's pricing this in this last pullback. So the market usually prices in things. So a lot of different things. I think it's an interesting time to be in the markets. I think it's at this point right here, what we're looking at. I'm looking for that bounce here. If we don't get it, then definitely going to consider stepping out of the market. I'm not too sure about going short here because we are at a point where I would expect a bounce in the market. So just wanted to bring that out to you. Understand that we're in a confirmed downtrend. Watch the major indicators. Each time we get a bullish crossover, we do get a pullback. Either if we're in a downtrend or an uptrend, we still get those momentum indicators. So that momentum indicator is oversold. And if we get that crossover and the momentum starts to turn back up, this will confirm this channel and we have a chance of breaking up out of this. So just want to drop this by you. I hope everyone enjoys this video, and I will see you in the markets. DayTradingRadio.com. Broadcast live on the radio at DayTradingRadio.com every day, every market day from 8:30 on, and we show you pretty much all the good setups that are happening in the market at that time. All right, so come on by. Thank you.